Hey, crypto friends. So, it is safe to say that most people panic when the crypto market crashes. It's safe to say, right? But that's when I love to make the most money, all right? And it does not come by luck, and it's not some secret coin pick either, all right? It's something that most traders overlook, actually, beginner traders, that is, which is what I will be showing you guys in this video today. And for those of you who are new here, my name is Garrett, and I am a crypto day trader and your personal shortcut to making better trades in the crypto market. And before we actually go ahead and dive into this video, for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis here, feel free to go ahead and try out the Blowfin exchange here. You can find a link to it in the description below this video. All right, guys. So here's the thing, all right? Now, I know that there is a ton of people out there. I mean, there's a lot of people out there. Trust me, I've seen it. There's a lot of people out there who absolutely hate people who short the crypto market. But honestly, I give zero shits, all right? I give zero shits simply because these people are the people who are missing out on all kinds of profits, all right? Not me, all right? Now, if the opportunity to make money shows itself, you can bet your ass that I'm going to take it. And that is exactly what I do when the market crashes. All right. So I'm going to be showing you exactly what I look for and how I go about shorting the overall crypto market when that happens. Okay. Now, normally I am trading the 1 hour chart at any given time, simply because I am mostly an intraday trader and I like to get in on, very quick moves that run within for a time frame of somewhere around, I don't know, like 30 minutes up to maybe like, shit, sometimes like 8 hours or so. But we're going to go ahead and get started here. The main thing that I'm going to be showing you guys in this video here is how to read candlestick patterns, because that is all about how I typically find where I'm going to short the market at. All right. So what I'm going to be showing you guys here is a bunch of candlestick patterns. Actually, I'm just going to be showing you a couple of them, and I'm also going to be talking about deviations from my moving average here as well. So for those of you who don't know me and who have not watched my videos in the past, I'm a big fan of using my 7-period moving average right here. I use this in every single day that I trade, and I use this for every single trade that I make as well. All right. I love the 7-period moving average, and you'll see why here in a little bit. All right. So, candlestick patterns. These are the candlestick patterns that we are going to be looking for today. All right. We're going to be looking for hanging man candles. We are going to be looking for shooting star candles right here. We're also going to be looking for gravestone doji candles. And we are also going to be looking for bearish spinning tops. And lastly, we are also going to be looking for bearish engulfing patterns as well, because I've seen quite a few of those lately, and I'm going to be talking about them. All right. So let's go back to the charts real quick and let's show you some bearish candlestick patterns that we've got going on here. All right. So obviously I'm not going to be taking a live trade in this video because obviously, I can't predict when the next short opportunity is going to be happening. All I can do is show you based off of previous candles that have happened so that you guys know what to look for moving forward. All right. So here is one right here. Let me go ahead and make my chart a little bit bigger here, and let's go ahead and take a look at this. So this bearish candlestick right here, you can clearly see this one right in here. This right here is a bearish hanging man candle. All right. It's got a very large body at the top, followed by just a single wick at the bottom. And that is what is called a bearish hanging man candle. And that is what we've got right here. It's got a uptrend. We've got the uptrend that's right before it. And then we have got the bearish hanging man that comes right after that. And typically what that shows us is that we ended up opening the candle way up in here, but then bearish momentum started to take over. We ended up going all the way down here, but then bulls started to push it up a little bit higher, back up to here, and we ended up closing right back in here. But this tells us right here, especially after a very big swing of, big bullish momentum, this tells us right here that bears are starting to gain momentum and they're starting to take over. All right. So let's go ahead and take a look and see how that happened. So as you guys can clearly see, the next candle ended up opening up and it ended up going down. Now, this is where I love using my moving average here. So once it ends up coming down to the moving average here, this is what tells me whether or not, bearish momentum is going to continue or not. All right. If this price action ends up dropping below the moving average, that tells me that bearish momentum is really, really taking over and we could enter a good solid short position here. Or you could enter a short position right after you see this bearish hanging man candle start. Now, if you were to have entered a position right there, let's say you entered in right on the beginning of this candle right here, the second one, If you were to have entered right there, you would have wanted to place your stop loss at the top of the previous candle right here. All right. Now the reason why is because if bullish momentum ends, or let's say price action ends up coming down to the moving average here, and instead of dropping further, it ends up bouncing off of it and going back up even more, then you will automatically get taken out right there and you won't lose very much. All right. Because obviously, if it ends up bouncing right here and ends up going back up and clearing this previous bearish candle right here, that's going to tell us right there that obviously price action is probably going to more than likely continue to go even higher, and we should probably get out of that trade so that we mitigate our overall losses here. All right. So that is how you would typically trade something like that. All right. So let's go ahead and take a look at another bearish candlestick pattern that we've got going on here. All right, guys. So here we have got, I mean, technically this is considered a shooting star candle, technically. It's usually a shooting star candle has a smaller body on it, but this one's got a pretty big body on it. But overall here, it's still a shooting star candle. All right. And that one looks like right in here. All right. It's got an uptrend before it. And then it's followed by, obviously, we ended up, opening the next candle, the bearish candle. And we ended up going upwards. Bulls tried to push it upwards, but bears started to kick it back down. And that right there tells us that, okay, bears are starting to gain momentum, and price action is probably going to start dropping from there. All right. And as you guys can clearly see, that is exactly what ended up happening right here. All right. And we ended up going all the way down to the moving average right here. And a couple candles later, we ended up going down, 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 and we ended up actually, making a good solid full trade out of this. So if you were to have ended up trading that, you would have made roughly around 2%. But usually people are trading with leverage. So if you were using 10x leverage here, you would have made a solid 20% gain right there. If you were using 20x leverage, you would have made a solid 40% gain right there. Either way, guys, that is some very good, solid intraday trading profit right there. All right. You cannot go wrong with making 20 to 40% from a single trade here in the crypto market. All right. So let's go ahead and take a look at one more. All right. Now, this is the other thing I'm going to be talking about here. A lot of you are probably going to ask, where should I get out? Where should I take profit? All right. This is going to be different across the board from person to person. All right. Me personally, I'm one of those types of traders where I only trade to a certain percentage every single day. I have a set target that I want to reach every single day, which is 15%. As long as I'm making 15% every single day, I'm completely happy. All right. So I usually try to get out of trades as soon as I'm at 15%. But if you wanted to ride this thing all the way down, all right, what you want to do is you want to wait until this price action, the candles, end up deviating super far away from the moving average itself. All right. That right there tells us that, all right, well, obviously it cannot keep going down straight forever. So it's going to end up going back upwards, and it's going to try to retest that moving average once again. And that's what you can clearly see happening right in here. All right. You can see that happening right in here. Price action, this candle right here, this giant candle right here going down, ended up deviating far away from the moving average. And then for the next 2 hours, price ended up staying stagnant right there until it reached the moving average once again before it started to drop once again. And then once again, we got way, way, way down here. We got way down here and we deviated far from the moving average again. And then price for the next 2 hours started to go back up and retest that moving average once again. So as you guys can clearly see, it's kind of a pattern, all right? It happens all the time, and that is how you read these candles to be able to short the market very, very accurately and to be able to get in on these, profiting from the market dropping, all right? It's very, very simple. All it takes is a matter of kind of getting used to these candle patterns, getting a good feel for how they overall work, all right? But overall here, guys, shorting the crypto market, it's really not that hard, all right? You just simply have to know what to look for, and it's not exactly rocket science or anything like that, all right? However, do not expect to be a master short trader in a very short time or anything like that, all right? It takes a whole lot of discipline and the ability to set tight stop losses if the top hasn't been formed quite yet, all right? That is a very, very important piece, all right? You have to be able to set tight stop losses. All right. If you're not able to do that, you're not going to make money short trading the market. All right. Now, do not get discouraged by this. All right. Once you start winning some short trades, you will start to see and understand the bearish pressure in the market more, like what I'm talking about here. All right. You'll start to see exactly what I'm talking about as far as, bearish momentum starting to get stronger and all that stuff. All right. Now, if any of you guys want access to this candlestick pattern cheat sheet that I have, feel free to go ahead and send me a message, and I'll go ahead and send it to you. It's no big problem. All right. Now, guys, before I go ahead and wrap up this video, if you guys enjoyed this video, feel like you got some pretty decent value out of it, please be sure to go ahead and subscribe to the channel. Go ahead and also hit the like button below the video as well to help me out. And guys, with that said, for those of you guys who stuck around and watched this entire video throughout the whole thing, I appreciate all of you and thank you for watching.